Good morning. Welcome to today's edition of the London Session Open. It's June 27, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. I'm going to provide you guys with a quick update on the main markets. We're going to take a look at the euro versus the dollar. We're going to take a look at Bitcoin, of course, and some of the other markets. Before we start, though, as always, I need to stress that trading financial markets, unfortunately, is risky, and we could potentially lose all of our invested money. Also, I'm going to share my view on the markets, but this doesn't mean necessarily that you need to do exactly as I say. Rather, the main purpose with this presentation is to support traders in their trading, but obviously not to take their decisions. For more on this, there's a little risk disclaimer here at the very bottom. Now, also, tomorrow and on Friday, I'm not going to be doing the webinars. I'm going to be away. I am, however, going to host an educational webinar at 3 p.m. tomorrow. So 3 p.m. London time. I'm looking at short-term trading, and I teach simple strategy on how to scalp the markets in the London morning. So you're most welcome to join that, but no webinar tomorrow at 9 a.m. here on Trade Captain, and it's the same on Friday. And I'm going to be back on Monday after my short break. Okay, we'll begin, and let's begin with the euro, which is moving to the downside, slightly lower today. But what's interesting is that the market looks to pull away from this high. You might remember that I said, want to be bearish from these levels. And today, yesterday actually, the market moved to the downside. And then today the market did try to push a little bit higher, but then the market so far is looking to give up. In the very, very short term, it even looks like we have a head and shoulders pattern. This is the head, left, right shoulder. And if we sort of take out the trend line, or neckline, sorry, which is pretty much here, alternatively like this, which is my preference. Let's see if I can put that line on. The software does sometimes a little bit what it wants to do. So if we take out that 1626 level, then that should really accelerate the down move. Now, I wouldn't focus too much on that short-term pattern. Short-term patterns in general don't carry over to the next day, and in general, quite unreliable. But I can tell you this: if we revisit this level, and as long as trade below this high, I think the market still is going to try to roll over here and move to the downside. Ideally already in position, and you should be up with about 54 pip on this move. Here's Bitcoin, and there's not, well, actually it is a little bit happening today. I thought it was nothing happening, but yeah, you might remember a few days ago we said look to sell here. That played out fine, and then my last setup was I said traders probably going to sell here with stops on the other side. So far looking okay. The market moved down a little bit. If it goes up, that doesn't change anything. Can push up to 6,400, 6,600. However, as long as we cap by this high, then it makes sense that this market should be able to trade to the downside. As well, let's take a look at gold. So gold, we said, a few days ago, we said look to sell here at 1282 for this to go to the downside. Then I said look to sell here at 1268 for this to go to the downside. And today I'm saying if we bounce back up to the breakout level at 1261, 1263 area, then I think traders are going to be selling. I think as long as trade below 1272, which is this high here from June 22nd, that this market will continue to move to the downside and could potentially reach 1250, if not the December 2017 low of 1236. Here's crude, and crude continues to go to the upside. Yesterday I said, and the day before, if we go down here, I think it would make sense to buy, because over here the risk-reward ratio would be better off. Now, the market is pushing to the upside, and as far as I understand it, it's on news that the U.S. is trying to sort of get his allies and other people not to buy crude oil from the Iranians, and that could potentially, mean less less sort of access to, not less sort of access, but less ample amount of crude oil. Obviously, I don't think it's going to stop the Chinese or anybody else, the Indians. I think they also buy crude oil from India. I think it's not going to stop them from buying crude oil. At the end, it's the wallet that talks, right? And with that in mind, I mean, I'm not sure if this is going to hold, but clearly the market is slightly up. And from a short-term technical perspective, fib from the very low to the high, if we move down, say 50% of yesterday's correction, then I think this market could head higher. And this is the DAX. The DAX is under pressure and continues to move to the downside. What can I say? There are markets you can sell. For example, I did talk about the Hong Kong Stock Exchange. I put that on the technical analysis section a few days ago. And yeah, of course you can short the DAX. I mean, there's nothing strange with this. We did say a break to 12,537 would take this to the downside. However, though, I didn't really anticipate the market to go down that easily because the overall market has been trading sideways for quite some time. I thought it was going to continue to remain sort of trading sideways and be difficult, really. But the market, is moving to the downside, and we just touched this level here and trying to break below it. The next major support level is 11,774 down here, and we'll see what happens. If you want to sort of scalp trade in the short term, I'm going to give you a few levels here you can focus on. And you have a double top here. This is a high created yesterday at 7 p.m. And then you have this level here, which is 12,362. So just above this high here from yesterday morning at 8 a.m. So the market obviously traded to the downside. Now I'm not going to be shorting here, but up and potentially lower again. So short and bearish below this high. And that, guys, concludes today's market update. Let's see actually if we have any questions. Yes, so Mauricio says good morning, and hi as well. Good morning to you. Thank you so much for joining. If you guys want to join the chat box, then just log in with your YouTube account and you'll be able to ask questions and say hello. Yeah, definitely a head and shoulders on the euro in the short term, and it looks now that it's triggering that. So for people that are not familiar with this, we should link sort of if this is sort of the left shoulder, this is the right shoulder, then you can link like that. You create a neckline, and when we trade below it, that's your sign to be bearish. And the difference between the headline, or the head, and the neckline is the target. So you can see here is 86 or 88 pips. Then you put it here and suggest that we can trade to the downside. Now these are trend levels, and it's difficult to sort of pinpoint exactly how they should be. Maybe someone does like that. So what I prefer is to use a combination of horizontal support and those trend lines. And here would be my sort of neckline. The target would still be based on what I just said. And technically the break did trigger here. And now we're pushing to the downside. So what people would do, and if they didn't short already, if they are short, they probably have stop losses either here or here. But my preference was to short yesterday. So we're already in position here if you trade on the back of that. So your stop loss is up here, and this is most likely going to be lowered to this level. To give you an idea, gold here, for example, is doing quite good, where the original entry was here, and now the stop loss is here. So we lock this in if one is still keeping that position. Then you have this position here as well. So if you reduce the stop loss here because it was here, then you have very low risk on the second one as well. And then the idea is, to be bearish again. Now, I don't suggest that you should be adding as much as some do, like here. Like every day sort of add a new position. Rather, if you're trading short term, then scalping is usually, or you going for a risk-reward ratio, sort of that is less aggressive, is better. And compounding on a position like this, it should only be done in special occasions, when you are very sure about the move. To give you an idea, I was sure about the move to the downside here in the euro. The market traded below 21.55, and I said probably could continue to head to the downside. Here, one could have compounded. We have the New Zealand dollar versus the USD coming up under pressure, which is right now at 68.12, 68.11, 68.12. And if I show you a weekly chart, then it's looking really interesting as well. If we trade below 67.89, which is not exactly the low, but pretty much the low, here, then this could potentially opening up for a decline. We could treat this as a rectangle with support down here, resistance up here. Difference between the high and the low, that is 646 pip. And I copy that, put it here on the potential breakout level, and that's just decline down to 61.35. So another 646 pip decline, which is the difference between these two levels. So I'm not saying you should go out and compounding now, but if we trade below lower, potentially lower, and then should hopefully not be sort of a choppy environment like this, but should rather be something like this, okay? And we'll just see how that plays out over the next few days. I did share that setup and that idea. I also shared some other setups here in the technical analysis section, which is up here. Nathan as well, of course, is sharing ideas and setups here, so you can check that out. If you didn't notice already, Nathan is publishing content from pretty much 8 a.m., sometimes a little bit earlier, and then he continues to publish content all the way up until 2 p.m. London time. That means that he will provide an instant reaction to things like UK data, European data, and US data published at 1:30 p.m. So you have someone that is an experienced trader that gives you these sort of levels to watch and sort of tell you what's going on in the main markets. And he does, of course, publish 2 to 3 ideas that he really likes in the morning, which are more of a long-term nature, whereas the other ones are more of short-term nature. As well, the guys Devaya and Vivek continue to publish macroeconomic content, and you can use that, of course, to sort of formulate longer-term ideas and sort of longer-term views on the markets. Okay, we're gonna wrap things up. I don't think we have any more questions. Okay, yes. So the DAX, we did it already. One recommendation is that when you if you join a little bit later, then pull it back. Do it like that. You can pull it all the way from the beginning and then load it. That way you see everything. So if you just arrive in the middle of the presentation or by the end of the presentation, again, just when you load it, pull it back from the beginning like that, and you'll see, because in the beginning of the presentation, I cover all of these markets. All right, guys, thanks so much for watching, and have a brilliant day. And I'll see you guys not tomorrow, not on Friday, but on Monday, because I'm taking Thursday and Friday off. Have a good trading day. Thanks.